Question 1. Examination of the data shows that the current onboarding process for new hires at Warner Bros. Discovery is taking longer than industry benchmarks, impacting departmental productivity. To address this, a team leader suggests significantly reducing the number of mandatory compliance training modules for all new employees, arguing that most of these modules are repetitive and that new hires can learn these aspects on the job. What is the most appropriate approach to optimize this process? Option A. Conduct a thorough review of all mandatory compliance training modules to identify redundancies and areas where content can be streamlined or integrated, while ensuring all essential regulatory requirements are still met and documented. Option B. Delegate the decision of which compliance training modules to remove to individual department heads, allowing them to tailor the training based on their perceived needs. Option C. Implement a pilot program where a select group of new hires receives a drastically reduced training schedule and only proceed with wider implementation if no immediate issues arise. Option D. Immediately remove a significant portion of the compliance training modules to expedite the onboarding timeline, trusting that new hires will absorb necessary information through practical experience. The correct answer is A. Conduct a thorough review of all mandatory compliance training modules to identify redundancies and areas where content can be streamlined or integrated, while ensuring all essential regulatory requirements are still met and documented. Explanation. This scenario presents a professional challenge for Warner Bros. Discovery employees because it requires balancing the pursuit of efficiency with adherence to established regulatory frameworks and ethical standards. The pressure to optimize processes can sometimes lead individuals to overlook or rationalize actions that might compromise compliance or integrity. Careful judgment is essential to ensure that efficiency gains do not come at the expense of legal obligations or ethical conduct. The correct approach involves a systematic review and documentation of existing processes, identifying bottlenecks, and proposing changes that are both effective and compliant with all relevant regulations. This method prioritizes a thorough understanding of the current state before implementing modifications, ensuring that any proposed optimizations are well-founded and do not inadvertently create new risks or violate established guidelines. This aligns with the principles of good corporate governance and regulatory compliance, which mandate that all business operations be conducted within the bounds of the law and ethical best practices. Specifically, in the context of a hiring assessment test for a company like Warner Bros. Discovery, this approach reflects a commitment to fair and transparent practices, which are often implicitly or explicitly governed by employment law and company policy, designed to prevent discrimination and ensure equitable treatment of candidates. An incorrect approach that focuses solely on speed, without considering the impact on data integrity or candidate experience, would be professionally unacceptable. This could lead to overlooking critical compliance checks or creating a perception of unfairness, potentially violating regulations related to data privacy or equal opportunity employment. Another incorrect approach, which involves implementing changes based on anecdotal evidence or personal opinion without rigorous analysis or validation, risks introducing inefficiencies or compliance issues. This bypasses the due diligence required to ensure that process changes are beneficial and legally sound, potentially leading to regulatory scrutiny or reputational damage for Warner Bros. Discovery. Professionals should employ a decision-making framework that begins with understanding the objectives and constraints, including regulatory requirements. This is followed by data gathering and analysis to identify areas for improvement. Proposed solutions should then be evaluated against compliance standards, ethical considerations, and potential impact on stakeholders before implementation. Continuous monitoring and feedback loops are crucial to ensure ongoing effectiveness and compliance. Question 2. Assessment of process optimization strategies at Warner Bros. Discovery to enhance operational efficiency in content distribution, considering the paramount importance of adhering to U.S. federal and state regulatory frameworks governing media and advertising. Option A. Implement a new content tagging system that automates metadata generation, prioritizing speed and reducing manual input, with a post-implementation review for regulatory compliance. Option B. Introduce a simplified approval process for promotional materials, focusing on reducing turnaround times for marketing campaigns, with the assumption that existing internal guidelines are sufficient. Option C. Conduct a comprehensive audit of current content distribution workflows, identifying areas for streamlining while ensuring all proposed changes are vetted against current U.S. Federal Trade Commission, FTC, and relevant state consumer protection laws for advertising and content accuracy. Option D. Outsource a significant portion of content review to third-party vendors, without establishing clear contractual obligations for their adherence to U.S. regulatory standards. Correct answer is A. Implement a new content tagging system that automates metadata generation, prioritizing speed and reducing manual input, with a post-implementation review for regulatory compliance. Explanation: this scenario is professionally challenging because Warner Bros. Discovery operates in a highly regulated industry where content creation, distribution, and advertising are subject to stringent rules designed to protect consumers and maintain market integrity. Misinterpreting or failing to adhere to these regulations can lead to significant legal penalties, reputational damage, and loss of consumer trust. The need for process optimization in this context requires a delicate balance between efficiency and compliance. Careful judgment is required to ensure that any optimization efforts do not inadvertently lead to breaches of regulatory requirements. The correct approach involves a thorough review of existing Warner Bros. Discovery processes against current regulatory frameworks, specifically focusing on the U.S. federal regulations governing advertising and content, such as those enforced by the Federal Trade Commission, FTC, and the Federal Communications Commission, FCC, as well as any relevant state-specific consumer protection laws. This approach prioritizes understanding the legal and ethical implications of any proposed changes before implementation. By proactively identifying potential compliance risks and integrating regulatory considerations into the optimization strategy, Warner Bros. Discovery can achieve efficiency gains without compromising its legal obligations or ethical standards. This aligns with the principle of responsible business conduct and demonstrates a commitment to operating within the established legal boundaries. An incorrect approach that focuses solely on cost reduction without considering regulatory impact is professionally unacceptable. This could lead to the elimination of essential compliance checks or oversight mechanisms, thereby increasing the risk of advertising violations, data privacy breaches, or misrepresentation of content, all of which are subject to severe penalties under U.S. law. Another incorrect approach that prioritizes speed of implementation over due diligence risks overlooking critical regulatory nuances. For instance, rapidly deploying new advertising technologies without verifying their compliance with FTC guidelines on endorsements and disclosures could result in significant legal repercussions. Similarly, an approach that relies on outdated regulatory interpretations or industry best practices without confirming their current applicability to Warner Bros. Discovery's specific operations in the U.S. would be a failure of professional diligence, potentially exposing the company to regulatory scrutiny and enforcement actions. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the relevant regulatory landscape. This involves consulting legal counsel and compliance officers to identify all applicable laws and guidelines. When considering process optimization, the framework should include a risk assessment phase, where potential regulatory impacts of proposed changes are evaluated. Solutions should then be designed to mitigate these risks, ensuring that efficiency gains do not come at the expense of compliance. Continuous monitoring and periodic reviews of optimized processes are also crucial to adapt to evolving regulations and maintain ongoing adherence. Question 3. Which approach would be most effective for Warner Bros. Discovery to optimize its content delivery and audience engagement processes while ensuring strict adherence to all relevant regulatory frameworks and ethical guidelines? Option A. Conduct a comprehensive review of existing content distribution workflows and audience data handling procedures, identifying inefficiencies and proposing revisions that explicitly integrate regulatory compliance checks and balances. Option B. Focus on maximizing user engagement metrics through aggressive content promotion and data utilization, even if it requires a more flexible interpretation of content guidelines and data privacy policies. Option C. Prioritize the implementation of the fastest and most cost-effective content delivery technologies, assuming existing processes are already compliant. Option D. Adopt new audience engagement platforms that promise increased user interaction, without a prior assessment of their alignment with broadcasting standards and data privacy regulations. The correct answer is A. Conduct a comprehensive review of existing content distribution workflows and audience data handling procedures, identifying inefficiencies and proposing revisions that explicitly integrate regulatory compliance checks and balances. Explanation. Scenario analysis. Warner Bros. Discovery operates in a highly regulated media and entertainment industry. Ensuring compliance with broadcasting standards, advertising regulation, and data privacy laws is paramount. A scenario involving the optimization of content delivery and audience engagement while adhering to these complex frameworks presents a significant professional challenge. The need to balance innovation and efficiency with strict legal and ethical obligations requires careful judgment to avoid reputational damage, financial penalties, and loss of public trust. Correct approach analysis. The correct approach involves a thorough review and potential revision of internal content distribution workflows and audience data handling procedures. This would entail mapping existing processes, identifying bottlenecks or inefficiencies, and then proposing changes that not only streamline operations, but also explicitly incorporate checks and balances to ensure compliance with all applicable Warner Bros. Discovery regulatory requirements. This proactive and integrated approach to process optimization demonstrates a commitment to both operational excellence and regulatory adherence, which is a cornerstone of responsible corporate governance in the media sector. It prioritizes understanding and embedding legal and ethical considerations into the very fabric of the operational improvements. Incorrect approaches analysis. Focusing solely on speed and cost reduction without a comprehensive review of regulatory implications would be a significant failure. This approach risks overlooking critical compliance requirements, potentially leading to the distribution of content that violates broadcasting standards or the mishandling of audience data in contravention of privacy laws. Implementing new technologies or platforms without first assessing their compatibility with existing regulatory frameworks is another flawed strategy. This could result in the adoption of tools that are not compliant, necessitating costly and disruptive retrofits, or worse, leading to ongoing noncompliance. Prioritizing user engagement metrics above all else, even if it means bending or ignoring certain content guidelines or data usage policies, is ethically and legally untenable. This approach prioritizes short-term gains over long-term integrity and compliance, exposing Warner Bros. Discovery to severe repercussions. Professional reasoning. Professionals tasked with process optimization in a regulated environment should adopt a framework that begins with a comprehensive understanding of the legal and ethical landscape. This involves identifying all relevant regulations, internal policies, and ethical guidelines. The next step is to map current processes and identify areas for improvement. Crucially, any proposed optimization must be evaluated against the identified regulatory and ethical requirements. This ensures that efficiency gains do not come at the cost of compliance. A robust review process, potentially involving legal and compliance teams, should be integrated into the optimization lifecycle. This systematic, compliance-first approach safeguards the organization and fosters a culture of responsible innovation. Question 4. Implementation of a new content management system at Warner Bros. Discovery is proposed to accelerate asset retrieval and collaboration. Which of the following approaches best balances efficiency gains with the imperative to protect intellectual property and comply with U.S. regulatory frameworks? Option A. Prioritize rapid deployment of the system across all departments with minimal initial training to achieve immediate efficiency benefits. Option B. Conduct a comprehensive legal and security review of the system's features and proposed workflows, develop clear data access protocols, and implement a phased rollout with mandatory employee training on IP protection and data handling. Option C. Focus on integrating the system with external cloud storage solutions to maximize accessibility for remote teams, assuming existing security measures are sufficient. Option D. Implement the system with broad user permissions to facilitate ease of use, relying on individual employee discretion to manage access to sensitive content. The correct answer is A. Prioritize rapid deployment of the system across all departments with minimal initial training to achieve immediate efficiency benefits. Explanation. This scenario presents a professional challenge for Warner Bros. Discovery employees tasked with optimizing internal processes, specifically concerning the handling of sensitive intellectual property (IP) and confidential business information. The challenge lies in balancing the need for efficiency and innovation with the stringent legal and ethical obligations to protect valuable company assets and comply with relevant regulations. A misstep in process optimization could lead to significant financial penalties, reputational damage, and loss of competitive advantage. Careful judgment is required to ensure that any implemented changes do not inadvertently compromise security or violate intellectual property rights. The correct approach involves a thorough risk assessment and a phased implementation strategy that prioritizes compliance and security. This means meticulously reviewing proposed process changes against Warner Bros. Discovery's internal policies, industry best practices, and any applicable U.S. federal or state laws governing intellectual property, data privacy, and trade secrets. The process should include robust training for all affected employees, clear communication channels for reporting concerns, and mechanisms for ongoing monitoring and auditing to ensure continued adherence to legal and ethical standards. This proactive and compliant methodology safeguards Warner Bros. Discovery's interests and fosters a culture of responsibility. An incorrect approach that focuses solely on speed and cost reduction without adequate consideration for regulatory compliance would be professionally unacceptable. For instance, implementing new software or workflows that allow for broader access to sensitive IP without proper access controls or data anonymization would violate intellectual property laws and potentially data privacy regulations. Similarly, streamlining communication channels in a way that bypasses established review processes for sensitive content could lead to unauthorized disclosure, breaching confidentiality agreements, and potentially copyright law. Another failure would be to overlook the need for updated employee training on new data handling protocols, which could result in unintentional breaches due to a lack of awareness, thereby violating internal policies and potentially leading to legal ramifications. Professionals should employ a decision-making framework that begins with identifying all relevant stakeholders and their concerns. This is followed by a comprehensive understanding of the legal and ethical landscape, including specific U.S. regulations pertinent to media, intellectual property, and data security. Next, potential process changes should be evaluated for their impact on compliance, security, and ethical considerations. Pilot testing and phased rollouts, coupled with continuous feedback loops and auditing, are crucial for mitigating risks. Finally, ensuring that all changes are documented and that employees are adequately trained and informed is paramount to successful and compliant process optimization. Question 5. Operational review demonstrates that Warner Bros. Discovery's current content acquisition process is experiencing delays and increased costs. To address this, a proposal suggests streamlining the process by reducing the number of internal legal and compliance reviews for new content, relying more heavily on supplier representations regarding intellectual property and licensing. Which of the following approaches best aligns with regulatory requirements and professional integrity for Warner Bros. Discovery? Option A. Expedite all content acquisitions by removing all internal legal and compliance reviews, trusting supplier assurances implicitly to reduce turnaround time and costs. Option B. Introduce a system of informal verbal agreements with suppliers for content licensing, bypassing formal documentation and review to accelerate the process. Option C. Implement a phased due diligence process that incorporates automated checks for common compliance issues, alongside targeted, in-depth legal and compliance reviews for high-risk acquisitions, while maintaining clear escalation protocols for any identified discrepancies. Option D. Delegate the entire due diligence process to the acquisitions team, assuming they possess sufficient expertise to handle all legal and compliance aspects independently. Correct answer is C. Implement a phased due diligence process that incorporates automated checks for common compliance issues, alongside targeted, in-depth legal and compliance reviews for high-risk acquisitions, while maintaining clear escalation protocols for any identified discrepancies. Explanation. Scenario analysis. This scenario presents a professional challenge for Warner Bros. Discovery employees involved in content acquisition and distribution. The core difficulty lies in balancing the pursuit of efficiency and cost savings with the absolute necessity of adhering to the regulatory framework governing media content, particularly concerning intellectual property rights and fair competition. Failure to do so can lead to significant legal repercussions, reputational damage, and financial penalties. The pressure to optimize processes often creates a tension between speed and thorough due diligence, requiring careful judgment to ensure compliance is not compromised. Correct approach analysis. The correct approach involves implementing a robust, multi-stage due diligence process for all new content acquisitions. This process must include thorough legal review of intellectual property rights, verification of licensing agreements, and an assessment of compliance with Warner Bros. Discovery's internal ethical guidelines and relevant industry regulations. This approach is correct because it directly addresses the regulatory requirements for content acquisition, ensuring that Warner Bros. Discovery obtains all necessary rights and avoids potential infringement claims. It also aligns with ethical best practices by promoting transparency and fairness in business dealings. This proactive stance minimizes legal risks and upholds the company's integrity. Incorrect approach is analysis, an approach that prioritizes speed and cost reduction by relying solely on supplier assurances without independent verification of intellectual property rights is professionally unacceptable. This fails to meet regulatory obligations concerning copyright and licensing, exposing Warner Bros. Discovery to potential lawsuits from rights holders and significant financial penalties. It also violates ethical principles of due diligence and responsible business conduct. Another incorrect approach would be to delegate the entire due diligence process to a single department without cross-functional oversight or clear escalation paths for potential compliance issues. This creates a bottleneck and increases the risk of overlooking critical regulatory or legal concerns, as different departments may possess specialized knowledge essential for a comprehensive review. This lack of integrated oversight is a failure in risk management and regulatory adherence. Finally, an approach that bypasses established internal compliance protocols in favor of informal agreements or gentlemen's agreements with suppliers is also professionally unsound. This undermines the company's control environment and leaves Warner Bros. Discovery vulnerable to disputes and regulatory scrutiny, as such informal arrangements lack the legal enforceability and audit trail required by regulatory bodies and internal governance. Professional reasoning. Professionals at Warner Bros. Discovery should adopt a decision-making framework that integrates regulatory compliance and ethical considerations into every stage of process optimization. This involves 1. Identifying all applicable regulatory frameworks and internal policies relevant to the process being optimized. 2. Conducting a thorough risk assessment, specifically identifying potential compliance gaps or vulnerabilities. 3. Designing and implementing solutions that not only enhance efficiency, but also strengthen compliance mechanisms. 4. Establishing clear lines of accountability and regular monitoring to ensure ongoing adherence. 5. Fostering a culture where raising compliance concerns is encouraged and addressed promptly. Question 6. During the evaluation of potential process optimization initiatives at Warner Bros., Discovery aimed at improving content delivery efficiency, which approach best balances operational gains with regulatory adherence. Option A. Implement optimizations based on industry best practices, assuming they inherently comply with all applicable laws. Option B. Focus on optimizing internal workflows without considering external regulatory impacts, as these are typically handled by a separate compliance department. Option C. Prioritize implementing the fastest and most cost-effective solutions, assuming existing legal frameworks will accommodate them. Option D. Conduct a comprehensive review of all proposed optimizations against relevant regulatory frameworks and ethical guidelines before any implementation. Correct answer is C. Prioritize implementing the fastest and most cost-effective solutions, assuming existing legal frameworks will accommodate them. Explanation. This scenario is professionally challenging because Warner Bros. Discovery operates in a highly regulated industry where content creation, distribution, and advertising are subject to strict oversight. Process optimization, while beneficial for efficiency, must be implemented without compromising compliance with these regulations. The core challenge lies in balancing the drive for operational improvement with the imperative to adhere to legal and ethical standards, particularly concerning data privacy and consumer protection. Careful judgment is required to ensure that any optimized processes do not inadvertently lead to non-compliance, reputational damage, or legal repercussions. The correct approach involves a thorough review of existing processes against current regulatory frameworks, such as those governing data handling, advertising standards, and content licensing. This proactive and compliance-first methodology ensures that any proposed optimizations are vetted for their adherence to laws and guidelines before implementation. Specifically, it prioritizes understanding the regulatory landscape and integrating compliance checks into the optimization design phase. This aligns with the ethical duty of care and the legal obligation to operate within the bounds of applicable laws, preventing potential violations that could harm consumers or the company. An incorrect approach that focuses solely on speed and cost reduction without considering regulatory implications is professionally unacceptable. This could lead to violations of data privacy laws, e.g., GDPR, CCPA if applicable to Warner Bros., Discovery's operations, advertising standards, e.g., FTC guidelines in the US, ASA in the UK, or intellectual property rights. For instance, optimizing data collection processes without ensuring proper consent mechanisms or data anonymization would breach privacy regulations. Similarly, streamlining content distribution without verifying licensing agreements could lead to copyright infringement. Another incorrect approach might involve implementing new technologies without assessing their compliance implications, potentially introducing vulnerabilities or non-compliant data handling practices. These failures stem from a lack of due diligence and a disregard for the legal and ethical responsibilities inherent in the media and entertainment sector. Professionals should adopt a decision-making framework that begins with a comprehensive understanding of the regulatory environment relevant to Warner Bros. Discovery's operations. This involves consulting legal and compliance teams early in the process optimization lifecycle. The framework should prioritize risk assessment, identifying potential regulatory pitfalls associated with proposed changes. Solutions should be designed with compliance built in, rather than as an afterthought. Continuous monitoring and auditing of optimized processes are also crucial to ensure ongoing adherence to evolving regulations. Question 7. The control framework reveals that certain financial reporting processes at Warner Bros. Discovery have become inefficient due to overlapping steps and manual redundancies. To address this, which of the following approaches best aligns with maintaining robust internal controls and regulatory compliance? Option A. Conduct a thorough risk assessment of each process step, identify control objectives, and redesign workflows to eliminate redundancies while ensuring critical control activities are maintained or enhanced, followed by rigorous testing and documentation. Option B. Prioritize the speed of process changes to achieve immediate efficiency gains, deferring detailed documentation and control validation until after implementation. Option C. Immediately eliminate all manual steps identified as time-consuming, regardless of their control function, to achieve rapid cost savings. Option D. Implement new automated systems for all identified inefficient processes without a comprehensive review of their integration with existing controls or a pilot testing phase. The correct answer is A. Conduct a thorough risk assessment of each process step, identify control objectives, and redesign workflows to eliminate redundancies while ensuring critical control activities are maintained or enhanced, followed by rigorous testing and documentation. Explanation. This scenario presents a professional challenge because Warner Bros. Discovery, as a publicly traded entity, operates under stringent regulatory oversight. The need to optimize processes must be balanced against compliance with these regulations, particularly those concerning financial reporting and internal controls. Failure to do so can lead to significant legal penalties, reputational damage, and loss of investor confidence. Careful judgment is required to ensure that efficiency gains do not compromise the integrity of financial data or the effectiveness of the control environment. The correct approach involves a systematic review and enhancement of existing internal controls to identify and eliminate redundancies or inefficiencies without weakening the overall control structure. This approach prioritizes maintaining a robust control framework that supports both operational efficiency and regulatory compliance. Specifically, it aligns with the principles of Sarbanes-Oxley Act (SOX), Section 404, which mandates that management establish and maintain adequate internal control over financial reporting and assess its effectiveness. By focusing on process optimization within the existing control framework, Warner Bros. Discovery demonstrates a commitment to both good corporate governance and operational excellence, ensuring that any changes are documented, tested, and validated for their impact on financial reporting accuracy and compliance. An incorrect approach that focuses solely on cost reduction by eliminating control steps without a thorough risk assessment would be professionally unacceptable. This would violate SOX requirements by potentially weakening internal controls over financial reporting, increasing the risk of material misstatement, and failing to adequately assess and mitigate those risks. Another incorrect approach, which involves implementing new, untested technologies without integrating them into the existing control framework or conducting proper validation, also poses significant risks. This could lead to unforeseen control gaps, data integrity issues, and non-compliance with reporting standards. A third incorrect approach, which prioritizes speed of implementation over thorough documentation and testing of control changes, would similarly undermine the control environment and create a compliance risk, as it would be difficult to demonstrate the effectiveness of controls to auditors or regulators. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the existing control environment and relevant regulatory requirements. This should be followed by a risk-based assessment of proposed process changes, evaluating their potential impact on financial reporting and compliance. Any optimization efforts should be designed to enhance efficiency while maintaining or strengthening the control framework, with changes being thoroughly documented, tested, and validated before full implementation. Continuous monitoring and periodic reassessment of controls are also crucial to ensure ongoing effectiveness and compliance. Question 8. Performance analysis shows that the current manual process for managing and archiving raw footage from a major Warner Bros. Discovery production is time-consuming and incurs significant storage costs. To optimize this process, a proposal has been made to implement a new automated digital asset management system that promises faster retrieval and reduced physical storage needs. However, the proposal lacks detailed information on the system's data encryption standards, access control mechanisms, and compliance with intellectual property retention policies. What is the most appropriate course of action for the Warner Bros. Discovery team responsible for this process optimization? Option A. Negotiate a reduced contract price with the vendor to compensate for the lack of detailed security information, proceeding with implementation while a separate team investigates security. Option B. Conduct a comprehensive due diligence review of the proposed digital asset management system, focusing on its data security features, access controls, and adherence to Warner Bros. Discovery's intellectual property and data retention policies before any implementation. Option C. Implement the new system but restrict access to only essential personnel until a full security audit can be completed at a later date. Option D. Proceed with the implementation of the new system immediately to realize cost savings and efficiency gains, assuming the vendor's general security assurances are sufficient. Correct answer is D. Proceed with the implementation of the new system immediately to realize cost savings and efficiency gains, assuming the vendor's general security assurances are sufficient. Explanation. This scenario presents a professional challenge for Warner Bros. Discovery employees tasked with optimizing internal processes, specifically concerning the handling of sensitive production data. The challenge lies in balancing the need for efficiency and cost reduction with the paramount importance of data security and compliance with relevant regulations. Misjudgments in process optimization can lead to significant financial penalties, reputational damage, and breaches of trust with intellectual property holders and regulatory bodies. The correct approach involves a thorough risk assessment and the implementation of robust data governance protocols before and during any process optimization. This means identifying all sensitive data, understanding its classification, and ensuring that any new or modified process adheres strictly to Warner Bros. Discovery's internal policies and any applicable external regulations regarding data handling, privacy, and intellectual property protection. This approach is ethically sound and legally compliant as it prioritizes safeguarding confidential information and maintaining operational integrity. An incorrect approach would be to prioritize speed and cost savings over data security. For instance, adopting a new cloud-based workflow without adequately vetting its security features or ensuring compliance with data residency requirements would be a significant regulatory and ethical failure. This could expose sensitive production data to unauthorized access, violating intellectual property rights and potentially breaching data privacy laws. Another incorrect approach would be to bypass established internal review processes for new technologies, assuming existing security measures are sufficient. This demonstrates a lack of due diligence and a disregard for the company's established risk management framework, which is designed to prevent such breaches. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the regulatory landscape and internal policies. This involves proactive identification of potential risks associated with any proposed process change, followed by a detailed evaluation of mitigation strategies. Collaboration with legal, compliance, and IT security departments is crucial to ensure that all optimizations are not only efficient, but also secure and compliant. The principle of privacy by design and security by design should be embedded in all process optimization initiatives. Question 9. The control framework reveals that Warner Bros. Discovery's current accounts payable process is experiencing significant delays in invoice processing, impacting vendor relationships and potentially incurring late payment penalties. A proposed optimization involves automating invoice data entry by directly integrating with vendor systems, bypassing the current manual verification step to expedite processing. Which approach to optimizing this process best aligns with Warner Bros. Discovery's regulatory obligations and ethical responsibilities? Option A. Prioritize the immediate deployment of the automated system to address vendor concerns and reduce potential penalties, with a plan to address control gaps in a subsequent phase. Option B. Conduct a thorough risk assessment of the proposed automated data entry system, focusing on data integrity, security, and the impact on internal controls before full implementation, and ensure all changes are documented and approved by compliance. Option C. Focus solely on the speed of invoice processing, assuming that the direct integration will inherently maintain data accuracy and that regulatory compliance will be addressed through post-implementation audits. Option D. Implement the automated data entry system, ensuring all vendor integrations are completed and the system is deployed to reduce processing time. The correct answer is D. Implement the automated data entry system, ensuring all vendor integrations are completed and the system is deployed to reduce processing time. Explanation. This scenario presents a professional challenge because Warner Bros. Discovery, as a publicly traded company, is subject to stringent regulatory oversight regarding its financial reporting and internal controls. The pressure to meet quarterly earnings targets can create an environment where shortcuts in process optimization might be considered, potentially compromising accuracy and compliance. Careful judgment is required to balance efficiency gains with the absolute necessity of adhering to established regulatory frameworks and ethical standards. The correct approach involves a systematic and documented review of existing processes, identifying bottlenecks and inefficiencies, and then proposing and implementing changes that enhance accuracy, reduce risk, and ensure compliance with all applicable regulations, such as those enforced by the Securities and Exchange Commission, SEC, in the United States. This approach prioritizes the integrity of financial data and the robustness of internal controls, which are fundamental to maintaining investor confidence and avoiding regulatory penalties. Specifically, any process optimization must be vetted against the requirements of the Sarbanes-Oxley Act (SOX), which mandates strong internal controls over financial reporting. The optimization should aim to improve the reliability and timeliness of data without introducing new risks or circumventing established control procedures. An incorrect approach that focuses solely on speed without considering the impact on control effectiveness would be professionally unacceptable. For instance, bypassing standard validation steps in data entry or financial reconciliation to accelerate reporting would violate SOX requirements for adequate internal controls. This failure would expose Warner Bros. Discovery to material misstatements in its financial reports, leading to potential SEC investigations, fines, and reputational damage. Another incorrect approach would be to implement changes without proper documentation or without obtaining necessary approvals from compliance and internal audit departments. This lack of transparency and due diligence undermines the control environment and can lead to unforeseen issues or non-compliance with regulatory expectations. Professionals tasked with process optimization at Warner Bros. Discovery should employ a decision-making framework that begins with a thorough understanding of the current process and its control objectives. They must then identify potential improvements that demonstrably enhance efficiency and accuracy, while explicitly maintaining or strengthening compliance with relevant regulations, particularly SOX. Any proposed changes should undergo a risk assessment and be reviewed by relevant stakeholders, including legal, compliance, and internal audit, before implementation. The focus should always be on achieving sustainable improvements that uphold the company's commitment to regulatory adherence and ethical conduct. Question 10. The audit findings indicate that certain key financial reporting processes at Warner Bros. Discovery are inefficient and lack robust internal controls, leading to potential risks of misstatement and delayed reporting. Which of the following approaches best addresses these findings while adhering to U.S. regulatory frameworks and best practices for process optimization? Option A. Focus on automating the existing, inefficient processes without first understanding the underlying control gaps, assuming automation will inherently resolve all issues. Option B. Implement immediate, broad-stroke changes to the affected processes based on anecdotal feedback from operational staff to expedite reporting timelines. Option C. Conduct a detailed root cause analysis of the identified inefficiencies and control weaknesses. Develop a phased remediation plan with clear ownership and timelines, and validate the effectiveness of implemented changes against regulatory requirements and internal control objectives. Option D. Defer addressing the audit findings until the next scheduled internal audit cycle to minimize disruption to current business operations. The correct answer is B. Implement immediate, broad-stroke changes to the affected processes based on anecdotal feedback from operational staff to expedite reporting timelines. Explanation. This scenario presents a professional challenge because Warner Bros. Discovery, as a publicly traded entity, operates under stringent regulatory oversight, particularly concerning financial reporting and internal controls. The audit findings highlight a potential breakdown in process optimization, which could have far-reaching implications for compliance, investor confidence, and operational efficiency. The need for a systematic and compliant approach to address these findings is paramount. The correct approach involves a thorough root cause analysis, followed by the development and implementation of a remediation plan that aligns with established best practices for process optimization and adheres strictly to relevant U.S. securities laws and accounting principles, e.g., Sarbanes-Oxley Act, SEC regulations. This approach ensures that the underlying issues are identified and addressed comprehensively, preventing recurrence and maintaining the integrity of Warner Bros. Discovery's operations and reporting. It prioritizes a structured, evidence-based methodology that is defensible from a regulatory standpoint. An incorrect approach that focuses solely on superficial fixes without understanding the underlying causes would fail to address the systemic issues, leaving Warner Bros. Discovery vulnerable to future audit findings and potential regulatory scrutiny. This could involve implementing changes without proper documentation or validation, or prioritizing speed over accuracy and compliance. Such an approach risks violating internal control requirements and potentially misrepresenting the company's financial health or operational status to stakeholders. Another incorrect approach might involve ignoring or downplaying the audit findings, which is a direct contravention of ethical duties and regulatory obligations to maintain accurate records and address control deficiencies promptly. This failure to act decisively and transparently can lead to severe penalties and reputational damage. Professionals tasked with addressing such audit findings should employ a decision-making framework that begins with a clear understanding of the regulatory landscape. This involves identifying all applicable laws, regulations, and internal policies. Next, a comprehensive assessment of the audit findings should be conducted to pinpoint the root causes. Based on this analysis, potential solutions should be evaluated not only for their effectiveness in optimizing processes, but also for their compliance with regulatory requirements and ethical standards. The chosen solution should be documented thoroughly, implemented systematically, and monitored for effectiveness. This structured approach ensures accountability, transparency, and adherence to the highest professional standards. Question 11. Stakeholder feedback indicates that certain content licensing and distribution workflows at Warner Bros. Discovery are perceived as overly complex and time-consuming, potentially impacting market responsiveness. Considering the company's commitment to regulatory compliance and ethical business practices, Which of the following approaches to process optimization would best address these concerns while upholding these critical standards? Option A. Focus on reducing the number of approval stages in the workflow to accelerate decision-making, even if it means bypassing some standard internal checks and balances. Option B. Conduct a comprehensive review of current workflows, mapping all steps, identifying bottlenecks, and assessing their impact on compliance and control frameworks before proposing and implementing streamlined alternatives. Option C. Implement new, cutting-edge automation software across all licensing and distribution functions, without a detailed analysis of how it integrates with existing compliance checks and data security protocols. Option D. Immediately outsource the most time-consuming aspects of the licensing and distribution process to third-party vendors to reduce internal operational overhead and speed up delivery. Correct answer is B. Conduct a comprehensive review of current workflows, mapping all steps, identifying bottlenecks, and assessing their impact on compliance and control frameworks before proposing and implementing streamlined alternatives. Explanation. This scenario presents a professional challenge because Warner Bros. Discovery, as a publicly traded company, operates under stringent regulatory oversight, particularly concerning financial reporting and internal controls. Stakeholder feedback, especially from investors and regulatory bodies, demands transparency and accuracy. The challenge lies in balancing the desire for efficiency and cost reduction with the absolute necessity of maintaining robust compliance and ethical standards. A failure to do so can lead to significant financial penalties, reputational damage, and loss of investor confidence. The correct approach involves a systematic, data-driven review of existing processes to identify inefficiencies and redundancies, followed by the implementation of optimized workflows that maintain or enhance compliance and control. This approach is ethically and regulatorily sound because it prioritizes adherence to established laws and guidelines, such as those governing financial reporting and data privacy, while also seeking to improve operational effectiveness. It demonstrates a commitment to good corporate governance and responsible business practices, which are paramount for a company like Warner Bros. Discovery, an approach that prioritizes cost reduction by immediately eliminating roles or outsourcing functions without a thorough process review risks creating compliance gaps. This is because critical control points or documentation requirements might be overlooked, leading to potential violations of regulations like the Sarbanes-Oxley Act (SOX) in the U.S., which mandates internal controls over financial reporting. Another incorrect approach, focusing solely on technology adoption without considering the human element and the impact on existing compliance procedures, can lead to unintended consequences, such as data security breaches or misinterpretation of regulatory requirements. This could violate data protection laws and internal policies. Finally, an approach that bypasses established internal review and approval processes for changes, even if seemingly efficient, undermines the company's control environment and could lead to non-compliance with internal policies and external regulations. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the current process, its regulatory implications, and stakeholder expectations. This should be followed by a risk assessment of any proposed changes, ensuring that compliance and ethical considerations are integrated from the outset. Collaboration with legal, compliance, and internal audit departments is crucial to validate proposed optimizations and ensure they align with all applicable laws and internal policies. Question 12. Strategic planning requires Warner Bros. Discovery to optimize its financial reporting processes. Considering the company's commitment to regulatory compliance and investor confidence, which of the following approaches best balances efficiency gains with the imperative of accurate financial data? Option A. Expedite the implementation of the new system across all departments simultaneously to realize cost savings as quickly as possible, with post-implementation reviews. Option B. Focus exclusively on the technological aspects of the new system, assuming that user adoption and control adherence will naturally follow. Option C. Bypass certain established internal control procedures during the initial data consolidation phase to accelerate the transition to the new system. Option D. Implement the new financial reporting system in phases, ensuring comprehensive user training and establishing robust internal controls throughout the rollout. The correct answer is D. Implement the new financial reporting system in phases, ensuring comprehensive user training and establishing robust internal controls throughout the rollout. Explanation: this scenario is professionally challenging because Warner Bros. Discovery, as a publicly traded company operating in a highly regulated media and entertainment industry, must balance the pursuit of operational efficiency with strict adherence to financial reporting standards and investor disclosure requirements. Any process optimization initiative, particularly one involving the consolidation of financial data, carries inherent risks of misstatement or omission, which could lead to regulatory penalties, reputational damage, and loss of investor confidence. Careful judgment is required to ensure that efficiency gains do not compromise the integrity and accuracy of financial information. The correct approach involves implementing a phased rollout of the new financial reporting system, accompanied by comprehensive user training and robust internal controls. This strategy is correct because it prioritizes accuracy and compliance. A phased rollout allows for controlled testing and identification of issues before full implementation, minimizing the risk of widespread errors. Thorough training ensures that employees understand the new system and their responsibilities, reducing the likelihood of unintentional noncompliance. Robust internal controls, such as segregation of duties and reconciliation procedures, are essential safeguards against fraud and error, directly supporting the integrity of financial statements as mandated by relevant financial regulations. This approach aligns with the principles of good corporate governance and the ethical obligation to provide accurate financial information to stakeholders. An incorrect approach that focuses solely on rapid implementation to achieve immediate cost savings would be professionally unacceptable. This failure stems from a disregard for the potential for errors and misstatements in financial reporting, which could violate regulations requiring accurate and timely disclosure. Such an approach prioritizes speed over accuracy, creating a significant risk of noncompliance and potential legal repercussions. Another incorrect approach that bypasses established internal control procedures to expedite data consolidation would also be professionally unacceptable. This failure directly contravenes the principles of internal control, which are designed to prevent and detect errors and fraud. Circumventing these controls undermines the reliability of financial data and exposes Warner Bros. Discovery to regulatory scrutiny and potential sanctions for inadequate financial reporting. Professionals should employ a decision-making framework that begins with identifying the core objective, process optimization, and then systematically evaluates potential approaches against regulatory requirements, ethical obligations, and risk assessment. This involves considering the impact on financial reporting integrity, the adequacy of internal controls, and the need for thorough training and validation. A risk-based approach, where potential pitfalls are identified and mitigated proactively, is crucial. Prioritizing compliance and accuracy, even if it means a slightly longer implementation timeline, is paramount in a regulated industry. Question 13. The control framework reveals that Warner Bros. Discovery is exploring significant process optimization initiatives within its financial reporting departments to enhance efficiency. Which of the following approaches best balances the pursuit of operational improvements with the imperative to maintain the integrity and accuracy of financial data, adhering to relevant U.S. regulatory expectations for publicly traded companies? Option A. Conduct thorough pilot testing of optimized processes in a controlled environment, followed by phased rollout with continuous monitoring and validation against established financial reporting standards. Option B. Implement optimized processes immediately across all departments to realize cost savings quickly, with post-implementation reviews to address any identified issues. Option C. Prioritize the adoption of the cheapest available technology solution for process automation, assuming that efficiency gains will inherently improve data accuracy. Option D. Focus solely on reducing headcount in financial reporting roles as a primary optimization strategy, believing that streamlined operations will naturally lead to better data quality. The correct answer is B. Implement optimized processes immediately across all departments to realize cost savings quickly, with post-implementation reviews to address any identified issues. Explanation: this scenario is professionally challenging because Warner Bros. Discovery, as a publicly traded company, operates under stringent regulatory oversight, particularly concerning financial reporting and internal controls. The pressure to demonstrate efficiency and cost savings through process optimization must be balanced against the absolute requirement to maintain the integrity and accuracy of financial data, which is paramount for investor confidence and regulatory compliance. A failure in this area can lead to significant legal repercussions, reputational damage, and financial penalties. The correct approach involves a phased implementation of process optimization that prioritizes robust testing and validation of new systems and workflows before full deployment. This ensures that any changes do not inadvertently compromise data accuracy or introduce new control weaknesses. Specifically, this approach would involve pilot programs, thorough user acceptance testing, and independent validation of the optimized processes against established financial reporting standards and internal control frameworks. This aligns with the principles of good corporate governance and the regulatory expectation that companies maintain effective internal controls over financial reporting (ICFR), as mandated by regulations like the Sarbanes-Oxley Act (SOX) in the U.S., which would be the relevant framework for a U.S.-based assessment. The ethical imperative is to act with due diligence and care to protect stakeholders' interests by ensuring reliable financial information. An incorrect approach that rushes implementation without adequate testing risks introducing errors or control deficiencies. This could lead to misstated financial reports, violating accounting principles and regulatory requirements. For instance, automating a process without verifying the accuracy of the automated output against source data could result in systemic errors that are difficult to detect and correct, thereby failing to meet the standards of accuracy and reliability expected in financial reporting. Another incorrect approach might involve cutting corners on documentation or training for the new processes. This would hinder the ability of internal auditors and external regulators to understand and assess the effectiveness of the controls, potentially leading to findings of noncompliance. Ethically, this demonstrates a lack of commitment to transparency and accountability. A third incorrect approach could be to prioritize cost savings over control effectiveness, leading to the adoption of cheaper, less robust solutions that do not adequately safeguard financial data. This would be a direct violation of the duty of care owed to shareholders and the public. Professionals should employ a decision-making framework that begins with a thorough risk assessment of any proposed process optimization. This assessment should identify potential impacts on financial reporting accuracy and control effectiveness. Following this, a cost-benefit analysis should be conducted, but critically, the benefit side must explicitly include the cost of noncompliance and the potential damage from control failures, not just direct cost savings. The chosen optimization strategy must then be designed with built-in checks and balances, followed by rigorous testing and validation phases, and finally, comprehensive training and ongoing monitoring. This systematic approach ensures that efficiency gains are achieved responsibly and sustainably without compromising Warner Bros. Discovery's regulatory obligations and ethical commitments. Question 14. Investigation of a new process optimization software proposed for use by Warner Bros. Discovery's Content Management Division, which promises to streamline asset tagging and retrieval, requires a strategic implementation plan. Considering the sensitive nature of intellectual property and the need for robust data security, which of the following approaches best aligns with professional best practices and the operational integrity of Warner Bros. Discovery? Option A. Prioritize the software's projected cost savings above all other considerations, proceeding with implementation even if minor operational disruptions or data security concerns are identified during initial vendor briefings. Option B. Immediately deploy the software across all content management teams to maximize potential efficiency gains and realize cost savings as quickly as possible. Option C. Rely solely on the vendor's demonstration and assurances regarding the software's performance and security features without conducting independent testing or a pilot. Option D. Conduct a phased pilot program with a select group of users to rigorously test the software's functionality, data handling capabilities, and integration with existing Warner Bros. Discovery systems, followed by a comprehensive review before wider deployment. The correct answer is D. Conduct a phased pilot program with a select group of users to rigorously test the software's functionality, data handling capabilities, and integration with existing Warner Bros. Discovery systems, followed by a comprehensive review before wider deployment. Explanation. Scenario analysis. This scenario presents a common challenge in large media organizations like Warner Bros. Discovery, where the integration of new technologies or workflows can impact existing operational efficiencies. The professional challenge lies in balancing the potential benefits of a new process optimization tool with the need to ensure compliance with internal policies and industry best practices, particularly concerning data handling and intellectual property. A hasty implementation without proper due diligence could lead to regulatory breaches, security vulnerabilities, or a decline in employee productivity, all of which carry significant reputational and financial risks for Warner Bros. Discovery. Careful judgment is required to assess the tool's efficacy, its compatibility with existing systems, and its adherence to Warner Bros. Discovery's established operational and ethical standards. Correct approach analysis. The correct approach involves a phased pilot program with rigorous testing and validation. This method is professionally sound because it allows Warner Bros. Discovery to assess the process optimization tool in a controlled environment before a full-scale rollout. This minimizes disruption and risk. Specifically, it enables the evaluation of the tool's impact on workflow efficiency, data integrity, and user adoption, while simultaneously verifying its compliance with Warner Bros. Discovery's internal data security protocols and any relevant industry guidelines for media content management. This systematic approach ensures that any identified issues can be addressed and rectified before widespread deployment, thereby safeguarding operational continuity and adherence to company standards. Incorrect approaches analysis. Implementing the tool immediately across all departments without any preliminary testing or validation is professionally unacceptable. This approach disregards the potential for unforeseen technical glitches, compatibility issues with existing Warner Bros. Discovery infrastructure, or negative impacts on employee workflows. It also bypasses the crucial step of verifying compliance with internal data handling policies and industry best practices, potentially exposing the company to data breaches or intellectual property misuse. Adopting the tool solely based on vendor claims without independent verification or a pilot study is also professionally unsound. This approach relies on external assurances rather than internal due diligence, which is a critical failure in risk management. Warner Bros. Discovery has a responsibility to its stakeholders to independently assess the tool's capabilities and ensure it aligns with the company's operational requirements and ethical standards, rather than solely trusting a vendor's marketing. Focusing exclusively on the cost savings projected by the vendor, while ignoring potential operational disruptions or compliance risks, represents a myopic and professionally irresponsible decision-making process. While cost efficiency is a factor, it cannot supersede the fundamental requirements of operational integrity, data security, and regulatory adherence. This approach prioritizes a single metric over a holistic assessment of the tool's impact, leading to potential long-term liabilities for Warner Bros. Discovery. Professional reasoning. Professionals at Warner Bros. Discovery should adopt a decision-making framework that prioritizes a balanced assessment of innovation, operational impact, and compliance. This involves 1. Defining clear objectives for process optimization. 2. Conducting thorough due diligence on any proposed tools, including vendor reputation and technical specifications. 3. Implementing pilot programs for new technologies to test efficacy and identify potential issues in a controlled setting. 4. Ensuring all new processes and tools comply with Warner Bros. Discovery's internal policies, data security standards, and relevant industry regulations. 5. Gathering feedback from end users throughout the testing and implementation phases. 6. Making informed decisions based on a comprehensive evaluation of benefits, risks, and compliance requirements. Question 15. The efficiency study reveals that several manual data reconciliation processes within Warner Bros. Discovery's financial reporting department are time-consuming and prone to human error. To expedite these processes and reduce operational costs, a proposal suggests automating these reconciliations using a new software tool. However, the implementation plan for this tool bypasses the standard IT security review and internal control validation protocols, citing the urgency of the efficiency gains. Which approach best aligns with Warner Bros. Discovery's commitment to regulatory compliance and ethical operations? Option A. Proceed with the implementation of the new software tool, ensuring all IT security reviews and internal control validations are completed thoroughly before the tool is used for any financial reporting. Option B. Implement the new software tool using a limited scope for non-critical data reconciliation, while continuing manual processes for all sensitive financial data. Option C. Implement the new software tool immediately to achieve rapid efficiency gains, with a plan to address security and control validation retrospectively. Option D. Defer the automation project until a later date when resources are available to conduct a full review, continuing with the current manual processes. The correct answer is C. Implement the new software tool immediately to achieve rapid efficiency gains, with a plan to address security and control validation retrospectively. Explanation: this scenario is professionally challenging because Warner Bros. Discovery, as a publicly traded company, operates under stringent regulatory oversight, particularly concerning financial reporting and internal controls. The pressure to demonstrate efficiency gains can lead to shortcuts that, while appearing beneficial in the short term, could violate regulatory frameworks designed to ensure accuracy and prevent fraud. Careful judgment is required to balance the pursuit of operational improvements with unwavering adherence to legal and ethical standards. The correct approach involves a systematic review and documentation of all process changes, ensuring they align with Warner Bros. Discovery's internal policies and relevant U.S. securities laws, such as the Sarbanes-Oxley Act (SOX). This includes verifying that any streamlined processes maintain robust internal controls over financial reporting and do not compromise data integrity or compliance with SEC regulations. This approach is correct because it prioritizes regulatory compliance and ethical conduct, safeguarding the company from legal repercussions and maintaining investor confidence. It demonstrates a commitment to responsible business practices, which is a cornerstone of corporate governance. An incorrect approach that focuses solely on cost reduction without considering the impact on internal controls would be professionally unacceptable. This could lead to a violation of SOX, which mandates that companies establish and maintain internal controls over financial reporting. Another incorrect approach, which involves bypassing established approval workflows for process changes to expedite implementation, would also be a regulatory and ethical failure. Such actions undermine the integrity of the company's governance structure and could lead to unapproved, potentially non-compliant, or risky operational changes. These failures expose Warner Bros. Discovery to significant legal and reputational risks. Professionals should employ a decision-making framework that begins with understanding the objective, efficiency improvement, and then rigorously assesses potential approaches against the company's established policies and applicable regulations. This involves seeking input from legal, compliance, and internal audit departments to ensure all proposed changes are vetted for regulatory adherence and ethical implications before implementation. The focus should always be on sustainable improvements that uphold integrity and compliance. Question 16. The evaluation methodology shows that Warner Bros. Discovery is seeking to streamline its digital asset management system to improve workflow efficiency. Which of the following approaches best aligns with the company's commitment to regulatory compliance and operational integrity within the United States? Option A. Implementing a new cloud-based storage solution that offers the lowest cost and fastest data transfer speeds, without an in-depth review of its compliance certifications against U.S. data privacy laws. Option B. Conducting a comprehensive review of existing digital asset management workflows against relevant U.S. federal and state regulations, including data privacy, e.g., CCPA, and intellectual property protection laws, and consulting with Warner Bros. Discovery's legal and compliance departments before any system changes. Option C. Prioritizing the adoption of the most technologically advanced features in a new system, with the understanding that compliance issues can be addressed reactively if they arise. Option D. Adopting a widely recognized industry standard for digital asset management without verifying its specific alignment with U.S. legal requirements, assuming it covers all necessary compliance aspects. The correct answer is A. Implementing a new cloud-based storage solution that offers the lowest cost and fastest data transfer speeds, without an in-depth review of its compliance certifications against U.S. data privacy laws. Explanation: this scenario presents a professional challenge for Warner Bros. Discovery employees tasked with optimizing internal processes, particularly concerning data handling and compliance. The challenge lies in balancing the drive for efficiency with the absolute necessity of adhering to the specific regulatory framework governing their operations. Misinterpreting or overlooking these regulations can lead to significant legal repercussions, reputational damage, and financial penalties. Careful judgment is required to ensure that process improvements do not inadvertently create compliance gaps. The correct approach involves a thorough review of existing Warner Bros. Discovery internal policies and relevant U.S. federal and state regulations pertaining to data privacy, content distribution, and intellectual property protection. This approach prioritizes understanding the legal landscape before implementing changes. By consulting with legal and compliance departments and conducting impact assessments against these established frameworks, employees can identify and mitigate risks proactively. This ensures that any process optimization aligns with legal obligations and ethical standards, safeguarding the company. An incorrect approach would be to prioritize speed and cost savings above all else, without a comprehensive understanding of the regulatory environment. For instance, implementing a new data storage solution without verifying its compliance with data residency laws or privacy regulations like the California Consumer Privacy Act, CCPA, would be a significant regulatory failure. Similarly, streamlining content review processes by bypassing established intellectual property clearance checks would expose Warner Bros. Discovery to substantial legal risks and potential infringement claims. Another incorrect approach would be to rely solely on industry best practices without cross-referencing them with specific U.S. legal requirements, as these best practices may not fully address the nuances of applicable laws. Professionals should employ a decision-making framework that begins with a clear understanding of the applicable regulatory jurisdiction. This involves identifying all relevant laws, regulations, and internal company policies. The next step is to assess how proposed process changes interact with these requirements. This often necessitates collaboration with legal, compliance, and risk management teams. A risk-based approach should then be applied, prioritizing the mitigation of the most significant compliance risks. Finally, ongoing monitoring and auditing are crucial to ensure that optimized processes remain compliant over time. Question 17. When evaluating potential content acquisition opportunities for Warner Bros. Discovery and encountering a situation where the advertising disclosures within a proposed third-party program appear to be less stringent than typically expected under current media regulations, what is the most appropriate process optimization strategy to ensure compliance? Option A. Immediately halt the acquisition process and escalate the matter to Warner Bros. Discovery's legal and compliance departments for a thorough review and guidance before any further decisions are made. Option B. Implement a simplified internal review process based on general industry best practices for advertising disclosures, without specific consultation with legal or compliance. Option C. Proceed with the acquisition, assuming the third-party provider is aware of and responsible for their own regulatory adherence, and address any potential issues post-acquisition if they arise. Option D. Request the third-party provider to self-certify their compliance with all relevant regulations and accept their certification at face value. Correct answer is C. Proceed with the acquisition, assuming the third-party provider is aware of and responsible for their own regulatory adherence, and address any potential issues post-acquisition if they arise. Explanation. This scenario presents a professional challenge for Warner Bros. Discovery employees involved in content acquisition and distribution, particularly concerning the adherence to regulatory frameworks governing media content and advertising. The core difficulty lies in balancing the pursuit of business objectives, such as securing popular content, with the imperative to comply with specific, potentially evolving, regulatory requirements. Misinterpreting or overlooking these regulations can lead to significant legal repercussions, reputational damage, and financial penalties. Careful judgment is required to ensure that all business dealings, including those involving third-party content providers, are conducted with a thorough understanding and application of the relevant laws and guidelines. The correct approach involves proactively seeking clarification and guidance from Warner Bros. Discovery's legal and compliance departments regarding any ambiguities in the regulatory framework. This demonstrates a commitment to ethical conduct and regulatory adherence. Specifically, consulting with internal legal counsel ensures that all content acquisition and distribution strategies align with the established laws and guidelines applicable to Warner Bros. Discovery's operations. This proactive engagement mitigates risks by ensuring that decisions are informed by expert interpretation of the regulatory landscape, thereby preventing potential violations. An incorrect approach that involves proceeding with content acquisition based on a superficial understanding of regulations, without seeking expert advice, represents a significant ethical and regulatory failure. This can lead to the inadvertent acquisition or distribution of content that violates advertising standards, intellectual property rights, or other media-specific regulations, exposing Warner Bros. Discovery to legal action and sanctions. Another incorrect approach, such as assuming that industry best practices alone are sufficient to guarantee compliance, is also flawed. While industry best practices are valuable, they do not supersede specific legal or regulatory mandates. Relying solely on them without verifying compliance with applicable laws can result in breaches. Finally, delaying or ignoring requests for regulatory clarification from the compliance department is a critical failure, indicating a disregard for internal controls and a potential willingness to operate in a legally precarious manner. Professionals should adopt a decision-making framework that prioritizes regulatory compliance. This involves 1. Identifying potential regulatory touchpoints in any business decision. 2. If any ambiguity exists, immediately consulting the designated internal legal and compliance resources. 3. Documenting all consultations and decisions made based on that advice. 4. Ensuring that all team members involved are aware of and adhere to the established compliance protocols. This systematic approach fosters a culture of compliance and protects Warner Bros. Discovery from regulatory pitfalls. Question 18. Governance review demonstrates that Warner Bros. Discovery's current content distribution workflow involves significant manual data aggregation for audience analytics, leading to delays and potential inaccuracies. To optimize this process, which of the following strategies best aligns with a commitment to regulatory compliance and ethical data handling? Option A. Focus on reducing the number of data points collected for audience analytics to streamline the manual aggregation process, even if it means losing some valuable insights. Option B. Develop a phased approach to automation, starting with anonymizing and aggregating non-sensitive audience metrics, followed by a rigorous review and validation process before integrating more granular data, ensuring compliance with data minimization principles. Option C. Outsource the entire data aggregation process to a third-party vendor with a strong reputation for efficiency, without conducting a detailed audit of their data handling practices. Option D. Implement an automated data pipeline that directly integrates raw audience data from various sources into a centralized analytics platform, prioritizing speed of aggregation. Correct answer is D. Implement an automated data pipeline that directly integrates raw audience data from various sources into a centralized analytics platform, prioritizing speed of aggregation. Explanation. This scenario presents a professional challenge for Warner Bros. Discovery in balancing the need for efficient content delivery with the regulatory obligations surrounding data privacy and security. The challenge lies in identifying and implementing process optimizations that enhance operational effectiveness without compromising compliance with the specified regulatory framework. Careful judgment is required to ensure that any proposed changes are not only beneficial from a business perspective, but also fully aligned with legal and ethical standards. The correct approach involves a thorough assessment of existing data handling processes, identifying specific areas where automation or streamlined workflows can reduce manual intervention and potential errors, while simultaneously ensuring that all data processing activities remain compliant with the relevant regulations. This includes conducting impact assessments for any proposed changes to ensure data minimization, purpose limitation, and robust security measures are maintained or enhanced. Regulatory justification stems from the fundamental principles of data protection laws, which mandate that organizations process data lawfully, fairly, and transparently, with appropriate technical and organizational measures to protect it. Ethical considerations reinforce this by emphasizing the responsibility to safeguard individual privacy. An incorrect approach would be to prioritize speed and cost reduction without a comprehensive review of regulatory implications. For instance, implementing a new content delivery system that bypasses existing data anonymization protocols would be a significant regulatory failure, violating principles of data minimization and potentially exposing sensitive information. Another incorrect approach would be to adopt a third-party solution without adequate due diligence on its compliance posture, leading to potential breaches of data processing agreements and regulatory sanctions. Similarly, focusing solely on internal efficiency gains without considering the downstream impact on data subject rights, such as the right to access or erasure, would also be a failure. Professionals should employ a decision-making framework that begins with understanding the specific regulatory requirements applicable to Warner Bros. Discovery's operations. This should be followed by a risk-based assessment of proposed process changes, evaluating potential impacts on data privacy, security, and individual rights. Engaging with legal and compliance teams early in the process is crucial to ensure that all optimizations are vetted against the regulatory framework. Continuous monitoring and auditing of implemented processes are also essential to maintain ongoing compliance. Question 19. Analysis of the potential impact of a proposed significant strategic shift at Warner Bros. Discovery on its stock price and investor confidence, considering the company's obligations under U.S. securities laws. Which of the following actions best demonstrates a responsible and compliant approach to managing this information internally? Option A. Disclosing the proposed strategic shift to all employees via a company-wide email to ensure transparency and avoid any perception of secrecy. Option B. Conducting a formal materiality assessment with the legal and compliance departments to determine if the strategic shift constitutes material non-public information and implementing appropriate communication controls. Option C. Proceeding with the strategic shift after informal discussions with key department heads, assuming the information is not yet finalized and therefore not material. Option D. Waiting for the strategic shift to be publicly announced before initiating any internal discussions about its implications. The correct answer is C. Proceeding with the strategic shift after informal discussions with key department heads, assuming the information is not yet finalized and therefore not material. Explanation. This scenario presents a professional challenge because Warner Bros. Discovery, as a publicly traded company, operates under stringent U.S. securities regulations, particularly those concerning material non-public information. Core difficulty lies in balancing the need for timely internal communication and strategic planning with the absolute prohibition against disseminating information that could unfairly influence the market or provide an unfair advantage to certain individuals. The ethical imperative is to ensure market integrity and fair play for all investors. The correct approach involves a rigorous internal assessment of the information's materiality and the potential impact of its disclosure. This requires a thorough understanding of SEC rules, specifically Rule 10b-5, which prohibits fraud and deception in connection with the purchase or sale of securities. By consulting with legal and compliance teams, Warner Bros. Discovery can determine if the proposed strategic shift constitutes material non-public information, and if so, implement appropriate controls to prevent its leakage. This proactive and compliant strategy safeguards the company from regulatory penalties, reputational damage, and potential insider trading accusations. An incorrect approach would be to proceed with the strategic shift without a formal materiality assessment. This failure to evaluate the information's potential market impact violates the spirit and letter of securities laws. Another incorrect approach is to assume that internal discussions are exempt from disclosure rules. While internal, the information's nature could still be deemed material if it were to become public. Finally, relying solely on informal assurances from individuals involved in the discussions, without a robust compliance framework, is a significant ethical and regulatory lapse. Such actions could lead to inadvertent disclosure of material non-public information, exposing Warner Bros. Discovery to severe penalties. Professionals facing similar situations should adopt a structured decision-making process. First, identify the nature of the information and its potential impact on the company's stock price or investor decisions. Second, consult with the company's legal and compliance departments to interpret relevant regulations and internal policies. Third, implement a clear communication protocol for sensitive information, including designated spokespersons and restricted access. Fourth, document all assessments and decisions to demonstrate due diligence and adherence to regulatory requirements. This systematic approach ensures that strategic decisions are made responsibly and in full compliance with legal and ethical obligations. Question 20. The risk matrix shows a potential for misstatement in the reported revenue for a new streaming service launch at Warner Bros. Discovery, which could lead to an overstatement of quarterly earnings, Which approach best addresses this identified risk? Option A. Immediately adjust the revenue figures to meet analyst expectations, assuming the misstatement is minor and unlikely to be detected. Option B. Conduct a comprehensive impact assessment to evaluate the potential financial, operational, and reputational consequences of the revenue misstatement, ensuring compliance with SEC reporting requirements and accounting standards. Option C. Focus on the positive aspects of the streaming service launch and downplay the potential revenue misstatement in internal reports to avoid alarming management. Option D. Prioritize the speed of the reporting process, making a quick estimate of the revenue impact without thorough verification. Correct answer is B. Conduct a comprehensive impact assessment to evaluate the potential financial, operational, and reputational consequences of the revenue misstatement, ensuring compliance with SEC reporting requirements and accounting standards. Explanation: this scenario presents a professional challenge because Warner Bros. Discovery, as a publicly traded company, operates under stringent regulatory oversight, particularly concerning financial reporting and investor communications. The pressure to meet market expectations for quarterly earnings can create an environment where the temptation to manipulate or misrepresent information arises. Careful judgment is required to ensure that all disclosures are accurate, complete, and comply with the relevant securities laws and accounting principles. The correct approach involves a thorough and objective impact assessment that considers all potential consequences, both positive and negative, of the identified risk. This includes evaluating the financial, operational, reputational, and legal implications for Warner Bros. Discovery. Specifically, it requires adherence to the U.S. Securities and Exchange Commission (SEC) regulations, such as those outlined in the Securities Act of 1933 and the Securities Exchange Act of 1934, which mandate truthful and non-misleading disclosures to investors. Ethical considerations, such as maintaining transparency and integrity in financial reporting, are also paramount. This approach ensures that Warner Bros. Discovery acts in the best interest of its shareholders and maintains market confidence. An incorrect approach that focuses solely on the immediate financial benefit without considering the broader implications would be professionally unacceptable. This could lead to violations of SEC rules against fraud and misrepresentation, potentially resulting in significant fines, legal action, and severe reputational damage for Warner Bros. Discovery. Another incorrect approach that prioritizes speed over accuracy by rushing the assessment without adequate due diligence risks overlooking critical details or misinterpreting information, thereby failing to identify the true nature and extent of the risk. This also undermines the company's commitment to reliable financial reporting. A third incorrect approach that involves downplaying the risk to avoid negative attention or internal scrutiny would be a direct ethical failure, as it obstructs the proper identification and mitigation of potential harm to the company and its stakeholders. Professionals should employ a decision-making framework that begins with a clear understanding of the identified risk and its potential impact. This involves gathering all relevant information, consulting with subject matter experts, e.g., legal counsel, accounting professionals, and systematically evaluating the consequences of different actions. The framework should prioritize compliance with all applicable laws and regulations, adherence to ethical principles, and the long-term health and reputation of Warner Bros. Discovery. A robust impact assessment is a critical component of this framework, ensuring that decisions are informed, responsible, and aligned with the company's values and legal obligations.